This problem right in front of me is the biggest problem I've come across.
Hi, everybody. Welcome back to Housing Insiders, the podcast for founders, builders, lenders, and regulators, and anyone who believes that everyone should be well housed. I'm Jonathan Lawless.
And I'm Jeremy Potter. On Housing Insiders, we're bringing you the smart conversations with people in the know, combined with actionable ideas you won't hear anywhere else.
You know, this is not going to be something that's going to be a surprise. We say this all the time, but buying a home is obviously the most expensive financial transaction most of us are going to make. Although the process can feel like it's kind of stuck in the 1990s, maybe the 1890s, depending on how you think about it. The approval times are lengthy. The loan files are bulky and paper heavy. Lenders are often losing money just because of all the fragmented systems and manual verifications.
Yeah, John, we called July Mortgage Month, and we spoke to mortgage CEOs about what it's like running a lender in this day and age. But we needed to extend that. We need more insight, I think, from technology vendors, companies, partners. And today's guest is the exact right person to ask these questions to, because as a serial entrepreneur, as a founder, as a technologist, Diane Yu has been in the actual building and execution of really modern technology problems, and then bringing that to mortgage to say, here's what we can do in a AI first mortgage technology company. That company is called Tidalwave. And so I'm really excited to dive in, given our last two guests on the mortgage process, and now hearing from a true technology expert on what we can expect out of this industry, but also out of Tidalwave.
Yeah, and I think one of the reasons I'm really excited, and we often say this about our industry, is that it's complicated. And to really build great technology for it, you kind of have to experience it and get to know it. And Diane certainly has that background. She was chief technology officer at Better. And so she certainly has seen the upfront, up close, real world of what it's like to do mortgage lending. But you know, even before that, her background is interesting. It's in ad tech. And so she co-founded a company called Freewheel, which is sort of a video advertising technology company that was acquired by Comcast for just $400 million. And she also spent 9 years at DoubleClick. So amazing background. Thank you so much for joining us. Welcome to Housing Insiders, Diane.
Thank you. Thank you, John and Jeremy. And that's really kind word. You do a much better introduction for me because I'm, as an engineer, I typically don't really like to talk about myself at all. Okay. Thank you for making that super easy for me.
Well, thank you for being here. We're very excited by the prospect of, John and I being in the innovation space, in the product development space, and then of course, overlapping with technology so often over the last several years, decades. It has, always been just around the corner that everything was going to change. Everything's going to change just around the corner. Next time, this will be the time, this cycle. And now we're actually starting to see some measurements of that, some proof of that. Your company, one of the proof points. Maybe you could just talk a little bit about Tidalwave and how you're measuring success so far, being that you've had some early wins. Just talk us through Tidalwave and some of those ways you're thinking about what success means.
Oh, that's perfect. So, John and Jeremy, before I even start on that, let me give you a little bit story about how I started, Tidalwave. So remember that, 20 years ago, I remember I did my first mortgage application when I was buying a house. It was such a frightening process because, first of all, I don't speak English as a native English speaker, you can tell. And then I did not even know what to ask. And then what I did is I submit a whole bunch of paperwork and then had heard nothing from the loan officer at the time until a few weeks later. And then they asked for more, but it's never transparent. So that process really, basically put a impression of frightening mortgage application on me and then remained for so long. Okay. And then 20 years later, after I sold my company and then I started my, second mortgage application process, everything remained the same. I was shocked. I was like, what? Okay. So, Remember in the days back in the days that now, like even with a smartphone and everything that consumer expect to have the immediate feedback, immediate reaction. Mortgage is not the same. So me as an engineer, I'm an engineer at core. So when I basically spot a problem, and which is a big problem, I'm set out to do it. I have to solve it. There's no way I will skim by, let it be alone. Okay. So that's how I started Tidalwave. And of course, I had the opportunity to learn everything about mortgage and understanding the complexity, the challenge, the reasons why it happened that way. I better. And also understanding there is no good tool. It's not because the lender doesn't want to do it in a better way, doesn't want to provide a better customer experience for them, for their customers. It's because there's no good tool in the industry to be able to do it that way. That's how I started, thinking, hey, with my technology background, with the team has been following me for the past 20 years. We understand what it takes to build a technology platform to support a complex industry. Why don't we set out to solve this problem? So luckily my co-founder feel the same. So we started Tidalwave together and, very quickly, fast forward. Now these days, we're not only in the industry as a point of sale provider, we also providing a lot more than point of sale. So people, compare Tidalwave Solo, saying that it's like a experience of a Porsche, comparing to a probably maybe like a horse, pulled carriage. So that's good. That's a good, good feedback to have.
That's absolutely right. Well, I love the backstory, and I think a lot of us have sort of experienced the same thing in housing. I worked at Fannie Mae, and then when I got my first mortgage, it was like I couldn't understand what was going on, despite the fact that I should have, given where I was sitting. You mentioned sort of being a better and seeing it a little bit from a different angle, so no longer from the consumer side, but now you're sort of seeing it from the lender side. And you mentioned that you saw more complexity than maybe you were expecting. Can you talk about like what was the sort of key insight that you got from being on the lender side that you might not have known sitting on the other side of the table? And then I'm actually curious because AI is such a big part of what Tidal Wave is doing. Was AI the thing that really the new ingredient that made it possible to attack this problem in a more meaningful way?
Oh, that's an excellent question, John. A couple of things. People from the outside, when you as a consumer, as a borrower, and it feels like everything's so easy. Why don't I have all those information? Why can't you give me an answer right away? When you go inside, you start to realize, and a lot of people that imagined is not typical scenario. Most of the American families, if you think about it, you have co-borrower. It's not like a single person's financial information will be able to qualify a home. Okay. And then more than that, you probably have, like a non-borrowing owner. And you may have friends in the family wants to give you some money so that can help you with the down payment. You have all those situations. As an outsider, I never expected that. Okay. As an example that, if you want to support a co-borrower, there are a lot of system has a limitation, just cannot do it. And a lot of people that are doing, basically in the back end, trying to create two separate loans, merge them together. Okay. Just imagine the level of the complexity it introduced to that. And then when you do a multiple borrower, you have to think some of the borrower doesn't live in the digital world. So they cannot e-sign. They do not have a email, and then they do not check their basic phone numbers. They do not check their message, right? So you have to take all of those into consideration. And the individual's financial profile are very different. Even though you think you all have a job, but the job has all different categories. Whether the bonus can be counted as part of your income, to what percentage can be counted as part of the income. It all have a different criteria, have a different calculations. So mortgage application is a lot more complex comparing to what an outsider would imagine, which is also the reason why, basically right now, everything seems like so easy, but mortgage is not. And then coming back to AI, So technology has evolved so much in the past 20 years. And then, 20 years ago, banking is not digital. You have to go to a branch. Right now, you can get all those bank-related information. And then 20 years ago, when you have to prove your employment, you have to find a place. You have to have your HR department write you a letter and send in the letter. Now these days, the employment information can be verified electronically. And as a result, there are a lot of building block is getting there. But the very last piece of the ingredients, I remember at the Better, and also these days talking to all those lenders, was very important for a borrower because it's the biggest transaction they have in their lifetime. They do not understand. They do need expert advice. They need to talk to someone they feel comfortable. They need to get their answers, basic questions answered in the right way in order for them to put forward financial information, right? So without that type of capability, it's very hard for a borrower to take the first step forward. AI is the closest, the very first technology could have that capability. Traditionally, you have to talk to a loan officer on the phone. You probably have to see them face to face in order for you to truly get, all those questions answered. But these days, with AI as a capability, you could have a conversation. You feel comfortable that you are not being judged in front of a person. You can have all those questions asked and answered. And this is what our point of sale, the unique difference between our point of sale and the traditional point of sale. Just to give you a number, for a borrower who asks our AI, okay, for at least one question, it completes the mortgage application with like 20% higher chance to complete the mortgage application, which tells you how important that is to get your questions, your concerns answered by basically an AI capability. And then if you have further questions, you can always reach out to the loan officer.
Mm-hmm. Mm-hmm. It does sound to me like, as you were describing, seeing the complexity from the lender side. And when we had Bob Walters on the podcast, he said he did a calculation, which is like, if you add, flip a coin 10 times, the number of possible combinations gets to be like this huge number. If you think about the guidelines for income and other things, like the rule set and the combinations and the possibilities become infinite very quickly because of the complexity. And so you can't really think of like, well, I'll just build a rules engine with infinite number of rules. That just doesn't, it'd be impossible to ever code that up. So that always struck me as an opportunity for AI, as it did to Bob Walters. But you're also saying that AI's capability of chatting with people, answering questions, and getting them comfortable was also a part of. Anyway, it's kind of interesting to me that you were focused more on that sort of interpersonal question answering part of AI's skill set, if you will, rather than its ability to kind of take complex rules, use some judgment, and sort of go through that process.
You're absolutely right. So that's, John, that's the part of the overall process, right? Because you need to starting to make sure that you get all those questions answered. And these days, a lot of people are not, they don't really have time to go to an office to sit down, right? So maybe in the middle of the night, I thought about something, I need to get my questions answered. And if we have this, help and support 24/7, that's a big support for the loan officers. For the lenders using our tool and the loan officer saying that, it gets so much easier and I can be on the go and then I can answer the questions, or, Tidalwave Solo would answer the question. I can look at all the, trace log of everything the borrower have ever asked for and understanding their concerns. So when I get on the phone with them, I know exactly what happened. That's a big difference. There's a big difference. And so the borrower feel like a personal support, know you type of support.
Yeah, it sounds like one of the things, and I don't mean to get too philosophical, but I'm just curious if you ran into this when you started building the technology. Because one of the mindset shifts that I think software gave the world was to break down the experience to its first and basic principles, right? That's something we've learned over the last several decades of software development that I think technologists brought to the business community to say, you have to start this way. and then build. But you're suggesting that there's this conflict inherently in the complexity of the underwriting guidelines that the customer and the lender cannot change. They are subject to those. So even if first principles says this is probably too complicated, it is the world we are handed as lenders and customers. And I'm curious if that experience created choices, or had you build technology that you wouldn't have otherwise built if you could have changed the underwriting guidelines, or if you just put that out of your mind because they can't change. And so we have to just go forward.
Right. So Jeremy, you can't, right? And then most of the underwriting guideline happen for a reason. And it's not just about that complexity, and also it's to keep on evolving. In the past, without AI, everybody's approach has been I'm creating rule. So I'm writing a software to creating that rule so that when you run into this situation, this is how I should respond. Okay. I'm an engineer. I think you guys understand that too, right? And then this is how software system is being built. But the problem is the moment you finish writing that, okay, the guideline changed. What do you do now? You do a patch upon a patch. And that become a problem. Over the time, it's so hard to maintain. And then therefore, even though at the very beginning, you may have a capability to underwrite one product, as soon as that guideline changed, your product has to be changed. And you only have like one product is not good enough, because you have to have the capability to support all of different type of product. There are many different type of product out there. Without the complete catalog, there's just no way that you can support a lender. You can support a platform, which is the unique capability that AI enabled. Because of AI's capability, what we see very unique in many ways. Well, number one, it can easily understand the underwriting guideline. Of course, you have to create that with the guardrail, because otherwise it will go super creative that you don't want that to be, okay? And which can talk about regulation, right? And the regulation and compliance, which is a key thing. You have to put a guardrail on AI in order for AI to perform the way that you want it. Just like how nobody can change the rule, nobody should think about changing the rule for Fannie Mae and Freddie Mac, right? And you have to follow that. You have to be able to do that within the guardrail so that the loan can be sold to the investors without a problem. Lender does not do the lending just for charity, right? Because when they do that, they have to do it in high quality so that there will be investors saying, I understand how you underwrite and everything's good, following the guideline. Now I can buy this loan. That will enable the lender to support more borrowers.
So the imagery that I got in my mind, Diane, I just want to make sure we're thinking about the new capability, and the capability the way you're thinking about it is almost like surrounding the data. In this case, it's the customer data, surrounding it with all of the different things it could apply to, things it could answer, or things it could qualify for. And that to me felt like very contextual. Whereas the world I think we're stepping out of is very linear, or even process oriented, in the sense of, well, I'll try this one. And then if that doesn't work, I'll try this. And if that doesn't work, I'll try this. And those are two very different models. Is that an accurate way to put that, surrounding contextually the decision making versus kind of one at a time decision making? Is that a key fundamental difference, or am I off track here?
Jeremiah, you hit the nail on his head. It's a contextualization. So, basically using the information that, is the right fit for the moment. It's the contextualizer that creating the input along with individuals' financial information, along with the underwriting guideline, to be able to produce the result that can create a summary for the underwriter, as an example, for the underwriter to see and review. Those are the problems that you have to know. And those are the problems you have to pay attention. And those are the documents you have to ask the borrower. So what we do, that's why we solve the problem, creating the solution, solving this problem from point of sale. Because at the point of sale, the moment that borrower submitting the document, we use AI to review the document with the correct contextualization. That way, we can provide feedback to the borrower right away, saying, hey, you may need this document. Okay, so we collect all of them. When we send to the lender's, user to review, we got everything lined up already. And that's how we save the time for the loan officer so that they don't have to go back and forth chasing the document. They do not have to apologize to the borrower all the time. Hey, sorry, our team realized that we were missing a document from you. Okay, so nobody wants to do that. And we collect all of those, making sure everything's ready and checked, reviewed. When the loan officer get online, when they review that, they understand everything we checked already. And they're saying, if this loan is ready, we send over to the underwriter, and then our AI suite can review all those documents in a much, much detailed level, so that provide the summary to the underwriter as well.
Mm-hmm. Let's get into your product a little bit because I don't think we've talked about it yet, and I just want to get an understanding because we both are in actually the unique position of like building technology in the mortgage space, and the more I sort of get into it, I just realize that there's just so much integration that has to happen. And so even as a point of sale, you think about, am I integrating with a CRM system? Obviously loan officers and brokers use all sorts of different CRM systems. And then of course, the next step after the point of sale is the LOS system. Is it Encompass? Is it some other back-end system? And then the mind-numbing complexity of the integrations on the way, Fannie and Freddie, CRA credit services, title stuff, appraisals, like depending on how far down the path you go up the CRM stream or down the stream to the LOS side or to the secondary market side or the servicing side, like you have to make a lot of choices about where you draw the line. And then depending on where you draw the line, there's, then you have to go convince a lender to take what you've built and plug it into their existing ecosystem. Anyway, so let's talk about, where does Tidalwave start and finish? Where does it integrate into a lender's process? So when you're making a sales pitch to somebody, what's the full end-to-end services that you're offering?
And this is a unique capability we have, because when we started out to build point of sale, and our mission is to make sure that we shift left, meaning that we need to integrate everything upfront so that we can provide the borrower the best experience, like real-time experience. So our system, we spend the past 3 years not only building our capability, also at the same time, we integrate with all those vendors that a lender would need in order to do the origination. So we integrated with all the credit report provider already. We integrated with CRM. We integrated with VOI, VOIE vendors. We integrated with like a doc engine and everything. So our system today is a plumbing complete. For a lender comes in, they can just pick and choose pricing engine. Which pricing engine you use, we can just plug right in. And we also have a deep integration with Encompass, like a two-way bi-directional data sync, which will enable our lender's user, loan officer, to work in solo as well as working in Encompass, so that they don't feel like they have to be, basically giving up one of the system in order to work on another. And we have situations where loan officers using both systems. We also have, processors. We have underwriters using Solo and using Encompass. Because our bidirectional data sync enable capability for you, basically lender user, that you can gradually teach your users to use a new system, like a gradual adoption. We always feel like a gradual adoption is the better way of doing things, and so that they can pick and choose which system that serve them better. And especially with our capabilities, we have mobile capability 100%, not just for the borrower, also for the lender user. They can be on the go and helping their customers, comparing being stuck in front of their desk.
And so it sounds like you work with Encompass, but if I'm using, say, Vesta or another third-party LOS, or I'm a broker and I integrate with Ease or Arrive or some other broker system, and I'm selling loans to Rocket, whoever, how do you fit into that ecosystem as well? Do you have those types of integrations, just not as deep as you have with Encompass?
That's right. So our approach is, and I want provide the lender the most choice option as much as possible. So we are LOS agnostic. So today, just because of a sheer amount of the customer, and then they all use Encompass, that's why we have a deep integration with Encompass. And we're also, working with other LOS as well, And my priority, especially since as a small startup, my priority always follow our customer. So if our customer need those type of integration, we integrate right away. Because we design the system in the way that we understand it has to be integrated. So our integration work takes no time. Just to give you an example, we recently integrated with a Snapdog. So our Snapdog integration completed before the lawyer even finished their review of the contract.
Amazing.
Diane, that brings up an interesting question. We've been describing this process with contextual data, underwriting guidelines, and the lender's process as relatively uniform. These are the things that have to happen, and understanding what all of the different tasks and iterations are. But also, lenders tend to consider themselves, at least as far as we understand, like very different from each other. I'm a broker shop. I am a retail lender, distributed retail. I'm a hybrid player with a couple of different channels. What is Title Look doing, or what insights have you gained understanding these different channels that you operate in, and how different are they really? Are they really different, or do they just think they're different? And how have you approached that challenge?
Mm-hmm. So this comes in with our experience of building a platform. A platform supporting all different lenders is a very different platform built just for one. Okay, so since day one, because we aim to build a lending platform, meaning that we have to be able to support big lender and small lender all at the same time. Okay, so our platform comes with a rich configuration capability, which means that your lender, enterprise lender, you're operating in one way versus the small lender, you're operating in the other way. Our platform can be configured as such to support your business, which is quite critical. Even though fundamentally everybody's underwriting loan, but there are a lot of differences, different type of loan product, different type of discount available, and how basically one lender is doing, for example, like handling the as a builder forward commitment very differently comparing to a lender only basically sell like resell the second homes, right? So all of those does require different configuration, which also is our competitive advantage, because when you look at the product out there, it's very easy to build a capability for a single lender, okay? But it's literally very hard and impossible to applying that single lender's capability across the board to all those lender partners, which is the unique advantage that Tidalwave has.
It's so true, and it's one of those complexities in the industry that just makes it hard for vendors to really compete, is because you're literally building a bespoke product for every customer in a way. Let me just give you an opportunity. We'll take a break after this question, and then we'll get into the more sort of far out there magic carpet ride type of questions we like to ask. But before we get there, I just want to give you a chance to talk a little bit about what your business successes look like, because I know we have a lot of lenders listening. You've gotten adoption, and you have moved really quickly, and you are doing a lot of loans. So anyway, give us the data. Tell us how it's going in terms of the business.
So we're very fortunate in that perspective. And today we have 22 lenders live 100% on our platform. And those lenders, including the big lenders and the small lenders and mid-market as well. Majority of our customer is IMB, but we do have big builders on our platform as well. And then we are also having bank and credit union on our platform, which is very unique. And we made an announcement when we announcing our Series A investment, and that our customers collectively is about 4% of market share. So we are not only right now today, we're not only having them live, and they're also ramping up on the adoption. They get 100% of their volume onto our platform. That, if you think about it, is not small, because collectively our customers doing over 200,000 loans a year, which is a platform set and to be able to support for them. And today we're basically ramping up on our go-to-market effort, and we are targeting all those lenders in all different five different categories: the builder category, the large enterprise IMB category, the mid-market IMB category, an example like a flat branch, all of those lenders. We have a list of lenders on our platform right now. And also on our website, because my position has always been that, if we serve the lender really well, and once we get them 100% launched, if they're happy, I will ask for their quote. So anybody shows up on our website with a quote, so they run 100% of their loans on our system.
Amazing. Well, congrats on all the success. And it sounds like definitely customers have been happy and the feedback has been good. And they're seeing lots of better process response times, speed, speed and everything that you want to see in a POS. So congrats on all that. Let's take a second for a quick ad break, and then we'll come back and ask some of those far out questions we love to ask.
Perfect.
Welcome back to Housing Insiders. We're talking to the co-founder and CEO of Tidalwave, Diane Yu, and we're really digging into this question of what is technology bringing to lending that is new and different this time around. And now we get to really expand on that, Diane, and ask you some of the things, like one of the topics we mentioned, in the first half of the show was AI. And the subset of AI that is the hottest right now is agentic AI. Can you talk a little bit about this question that I think all technology companies and now non-technology companies have, which is, do I do this myself? Do I partner with an existing agent like a Claude and do some coding through there? Who do I trust and why? Can you talk about your experience just choosing, this is how we're going to think about this at Tidalwave, and then what that experience has led to?
Yeah. So Jeremy, before I even talk about agentic AI, what's the difference there? So I want to start with basically a heavily regulated industry, what it takes to build a capability. Okay. So let me start with the study that we did with Columbia University. That study is basically comparing us solo with a thin wrapper of cloud. Okay. So the study test run on many questions, including the one that are related to compliance, as an example. The compliance-related questions, Tidalwave Solo with mortgage contextualizer, because with the right guardrail, we were able to answer all the compliance-related questions with 95% accuracy. Comparing to a thin cloud wrapper, 4.5, that's the time when we did the study. Comparing to a thin wrapper, the thin wrapper can only understand and answering the compliance-related question with 42% accuracy, which means there's a big difference. You'll have to use the AI in the right way, especially in a heavily regulated industry, the environment, to do it correctly. And then that means for any type of AI, okay, if a lender want to deploy an AI, I would not recommend just use an open AI, and then just trust that it's going to do all those work. It's not. We know it's not accurate because you have to feed the AI with the right contextualization information for it to behave in the correct way. Okay, so that comes back to Tidalwave's technology. So Tidalwave mortgage contextualizer is a patent pending technology. So what we did is, because since the very beginning, we understand in order to adopt a creative type of tool, AI, typically very easy to hallucinate. Okay, in order to adopt a creative type of tool in a heavily regulated industry, what you need to do is you need to create a guardrail first. You need to feed that with the right type of constraint. That way, everything you do with a purpose. So it's not like random. It's not just asking questions to give you the answers. So you do with a purpose. If you think about mortgage origination, that people help you to get a mortgage, doing things with a purpose. Every question they ask is aimed to get better understanding about your financial data. Also, at the same time, doing that with a purpose gonna get you to a loan. Okay, get to an approval. So that way you can ask the right questions. You do not over ask, you do not hallucinate, you do not give them the incorrect answer, which is a huge difference. Okay, and people these days, and there are a lot of AI company out there, they can come in, do a demo, say, look, everything's so fancy, they can web code the entire beautiful UI in a week. Okay, there are many companies doing that, by the way. And then come in, give you a demo, say, look, I can answer the question relatively okay, seems like accurate. And then on a demo, super impressive. In production, you know what? The same information doesn't always produce the same answer. Now you are in trouble, okay? Because as a lender, you have to always produce the predictable answer because you have to be able to audit. You have to follow the compliance guideline. So that's the huge difference if you look at a system. And then that's why when I think about Tidalwave's AI capabilities, that we pay attention a lot more to the guardrail. Okay, we build that capability that we know they're critical data points. Not only you need to ask AI to run the calculation, you also need to provide the requirement that we verify with the calculation. Okay, so we have that capability built in, and then this is how 100% of the time you go ask for the same question, we will produce the same answer. And this is how our asset agent behave very differently compared to others. As an example, when we review the data, okay, and if we pick out any type of like question, concerns, calculations, you click on that, you go to the document where the data came from. So you see exactly, when you see we identify buy now, pay later, you click to that. We give you all the summary of every single entry transaction of buy now, pay later. If you click on any of those entry, we go to the document, highlight where that number come from. So that creates very different type of structure. It's not just providing a summary. It's not just, hey, I'm summarizing this document for you so that you know where you need to look. And this is providing the level of the underwriter required consistency and accuracy to be able to do and evaluate that upfront.
I might be going too far down the path of where Jeremy might be going, but I want to really understand what you're talking about, Diane, because it strikes me that this is one of the more important aspects of Tidalwave. So if I'm planning on building AI as a way to do a customer interaction on mortgage, I might go to Claude and say, hey, build me a fancy POS screen, and it will go build the code, and like I would have a beautiful front end screen. And then when information comes in, I'm going to just send it to Claude or to OpenAI or to Gemini, whatever. I want Gemini or OpenAI just to use the context it has from the screens or whatever, and then answer the question.
By the way, you cannot. You should not. You should never do that, because you should not send PII related information to an open cloud.
Yeah, that's where I was going. And so
Yep.
it sounds like there's two problems with that. One is you got to figure out how to do that somehow, getting rid of the PII if you do that. And then secondly, it's very hard to rely on how an OpenAI is going to respond to a certain question. And so there's a security issue, and then there's a consistency issue in the answers. What you're saying is the answer is, instead of using OpenAI or Claude or whatever as the LLM that sits behind it, you've built your own.
I will not claim that we build our own large language model. We don't. So what we do is we have a really well-structured mortgage contextualization capability. So that capability, I would say that it's structured in a way can remove the sensitive information before you ask any questions to large language model. And then what we can do is we can keep those information on our platform so that your borrower's financial data doesn't get leaked. The information that you send over is that can pass the compliance department of our customer. We have large customers and have their huge legal and compliance department that they go through everything that we send back and forth, and they understand, they approve how we do that.
Got it. Okay, so you have an additional layer of protection that ensures all of that, which I can only imagine is a very complicated thing to build.
Which is also our competitive advantage, right? Because
sure.
when you do a purposely built platform, it's very different comparing to someone just web coding something that looks like okay.
Yep.
I'm curious about the other players that we've sort of hinted at but haven't mentioned yet. You mentioned earlier there's the home builder relationship that some lenders have. We know that referral sources like real estate agents, financial advisors, in some cases brand to brand partnerships have these relationships. And now we're seeing, a lot more real-time demands for updates, information. In some cases, we're seeing real-time demands where consumer information can get passed over in a compliant way between these types of referral partners. What trends or insights are you seeing that is changing the way we think about partnerships and referrals?
We do see a lot of those partnership and referral and providing the lead to the loan officer for sure. So we have that capability, basically have a co-branded page and have the partnership, your partners can log into an app and do a lot of work for you. For example, like serving a pre-approval letter downward, with a lesser amount approved, comparing your original number. So all of those that we see there's a trend, especially as people adopting the basic new technology out there available, that those work seamless, like sending referral link, and then so that their borrower can put in the application right away, has been a basically growing trend.
And just out of curiosity, I'm also imagining that we're not far away from a consumer agent doing some shopping or doing some other tasks on behalf of the consumer, on behalf of the bar. Are you seeing any of that? And what do you think the implications of that could be if we start to see consumer generated agents participating?
Not there yet in terms of mortgage, which is not a surprise because mortgage is a heavily regulated industry, right? So we are dealing with a bank level of the security and the regulation. However, I do agree with you. I think one day, basically consumer light type of agent will need to be able to interact with a mortgage application, okay, and to work on that, doing some pre-information gathering. I still feel like much of that, it's really in early stage. And then I can imagine a house shopping type of agent shows up for consumer. Hey, I want this type of house, and you can just go and find them. Okay, but getting a mortgage application is not directly going there yet. But we could imagine, we support big builders that, as you know, and then we are, basically working with them to support a modern experience. I will not be surprised in the future that there's a certain type of consumer agent and working with us directly.
Mm-hmm. Yeah, I think we're all anticipating that coming at some point. So, and one thing that could be on the horizon is that OpenAI or Claude or any of these tools can figure out how to handle all of the things you're handling. Like you built all this great sort of proprietary systems. Maybe someday, like I can just ask Claude to build the same thing and get the same thing in a remarkably efficient, perfect way. Another sort of trend that you just mentioned is sort of like how consumers are going to interact with AI. Is voice AI going to be something we see a little bit more of? Right now, I just don't think the voice interactions are very, honestly, they sound painful and fake. I think most people do that, but like those are going to get better. And I guess the last thing I'll say, just in terms of looking ahead, is we're seeing this sort of coming trend of people trusting AI more than people. I remember we had Mike Yu from Vesta on, and he said, I don't know why people don't trust the car being a driverless car, because like, how can you trust a driver more than you trust a computer, right? Like, which was sort of for me like an interesting insight. But this idea that people will suddenly trust AI more than they trust other people is also one of those things that's coming. So anyway, I threw out a lot of things, but I just would love to get your sort of looking ahead, what's coming on AI and what does that mean for Tidalwave and for the industry?
Mike and I, basically talk a lot on the, same category because he's an engineer, I'm an engineer. So we like, we nerd out together. So in many, many ways, as an engineer, and I do have a tendency to trust computer more. Okay. But it comes back to the mortgage industry though. What I see is we're using AI, and the first step should be using AI to supercharge human first. Okay. Because, well, number one, as I said, that mortgage, is one of the biggest financial transaction of a human's lifetime, right? So you need a lot of hand holding. How to hand holding that in the right way and also power charge all your knowledge and to be able to help the borrower better. That's very critical. That's the first step. I imagine how AI will enable your lender users, basically all those users like loan officers and underwriters, in a way that's super efficient, so power charge them, so that instead of doing 2 loans a day, they probably can do 2,000 loans a day. Okay. So I think that's the number one, basically. I see that it's going to happen first. And after that, as consumer trust this process more and more, okay, I do see that the lender will become different where, basically as an example, loan officers, I see the future, they could, become more like the ones that generating a lot of lead, a lot of user knows, going through them, they can help them find the best loans possible. Okay. And those are all powered by technology. I do not see you can just easily replace human in a lender, basically, especially the bigger the lender it is, a lot of intricacies, a lot of, process in place, those process in place for a reason, right? I do not see that you can easily do that. And then I think the first step really is making sure that we use technology to power charge them, creating that capability. It is about competition though, right? If you imagine a lender who can use the right tool, they can do the, basic origination in a much faster and cheaper way. In that case, they're helping their borrower better. And I tend to think that if we do create our platform in the right way, we're helping our lender customers and originate much lower. In return, we're helping the homeowners to get more affordable housing.
Yeah, well said.
I agree, because differentiation is one thing that's always been kind of elusive to mortgage in a lot of ways. It started many, many years ago as a geographic differentiation, like this is my region, this is my market. And then as technology came into the space, it became more of like, well, I'm faster or I have this type of service. But now what you're saying is we're really going to start to see some major differentiation that we never saw before in this commodity, thanks to the way in which your engine, to use the Porsche analogy you said earlier, your engine is going to be put to use in the market. I think that can only be good for home buyers and homeowners.
That's my desire.
Well, thank you so much. We are running out of time here, Diane, and so we like to kind of continue to wrap up on kind of a creative question, a question that we get a lot from talking to founders. We have a lot of founders and innovators that listen to this show, and you've been an entrepreneur many times over. You bring that engineer creative mindset, and so we like to ask, if you weren't working on this problem with Tidalwave, what other problem is out there that you think somebody should tackle? And if they are listening, what would you point to? What would you say, hey, we can't work on this because we're focused at Tidalwave, but somebody needs to do this? What would that be?
As an engineer, when I come across a problem and I have to solve for that, this problem right in front of me is the biggest problem I come across. So I'm so passionate about solving for this. And as an entrepreneur, I think you find your passion by identifying the problem. If a problem that nobody has a better solution compared to what you can imagine, just go do it. And it's such an amazing time, especially powered by AI. There are many things that you thought not possible now become possible.
It's very well said, and you don't have to look very far to find a problem in our outdated, often challenging industry. And I think you're right. AI is that new ingredient that makes a whole bunch of new recipes possible that just never could have existed in the past. So we look forward to other people doing it. Diane, it's such a pleasure to talk to you. Congratulations on all the success. Thank you for joining us today.
Same here. Thank you very much.
That's going to do it for today's episode. As always, for our listeners, we'd love to hear from you. We always love getting emails from you. Our email address is podcast@thehousinginsiders.com. And if you like what you hear, if you like this episode, please leave us a review on whatever platform you're listening on.
If you hit subscribe, that helps our episodes find your feed, but it also helps us get our episodes out to new listeners as well. Share our episodes and let us know who you want to hear on the next episode of Housing Insiders. Thank you, as always, to Keenan Chen for our music.